any right-thinking person would say that the citizens of your own country should take priority over the needs of creditors. So first of all, the word default has got a bad connotation. So technically, if you look at the literature also, there is no clear definition of what is default. This is not a market that is attractive to foreign investors. Even candles, the main fuel oil in a candle is derived from oil, crude oil. You might even run out of candles basically, because the raw material for a candle is also imported. 200 individuals through multiple accounts would account for probably 50% of the turnover, and they may be first-time investors and they may be excessively optimistic, not seeing the downside. So when the tide recedes, as Warren Buffett said, we will know who is swimming naked. This is not sustainable, and there will be a time where the market will either go sideways or the prices will come back. Now, the really smart people are the ones who would read the tea leaves and say, enough is enough, I'm going to take my chips off the table and walk away, even if I give up another 20%. So Sri Lanka, contrary to what people think, actually has a spending problem. It's a contradiction to try to do import protection or domestic industry protection and exports. The two don't go together. There is something called the infant industry model. Now, in a human being, I've asked this question, when do you stop being an infant? I would think it's 2 years. And if we do not allow competition like the regime that we have, our firms will never become good. Our citizens will never enjoy low prices.
Hello and welcome to the first edition of the Morning Talks. I'm Charindra Chandrasena, the chief editor of the morning newspaper. And today we have with us Mr. Murtaza Jafferjee, the CEO of JB Securities and the chairman of Advocata Institute. Murtaza, now Sri Lanka has just repaid a $500 million international sovereign bond. When there was a school of thought that we should instead be trying to restructure and reschedule our debt. You at one point said that it seems the government and the central bank are prioritizing the needs of its creditors over the needs of its citizens. Do you still stand by that? And do you not think that we should have repaid that last ISB?
My sense is that we should have prioritized the needs of the citizens of this country. Let's go by even the headlines of your newspapers and the other daily newspapers. They're talking about a power crisis, a shortage of fuel, etc. These are essential needs of the citizens of the country. And if these shortages are due to a lack of foreign exchange, then any right-thinking person would say that the citizens of your own country should take priority over the needs of creditors. And therefore, I would have kept the $500 million and asked for a moratorium on all our creditors and used it for the needs of our economy.
Professor Lisi Bukait of the University of Edinburgh Law School, who has been involved in the debt restructuring processes of Greece and Iraq, recently said that if Sri Lanka were to embark on a debt restructuring process, the ISP holders would ask for the debt of bilateral creditors also to be restructured to ensure that the pain is shared. Is that not accurate?
No, that's accurate. So that is what you'd call inter-creditor equity. So let's look at the total creditor stack of Sri Lanka. We have about $10 billion worth of debt owed to the multilaterals, $5 to $6 billion owed to bilaterals, with the government of Japan being the largest bilateral creditor, followed by India, followed by China. And then we have about $20 billion of private creditors, financial market creditors, of which there's about $12.5 billion worth of Euro bonds, or what we refer to international sovereign bonds. And the balance 7 billion, which is mainly commercial loans, of which the China Exim Bank and the China Development Bank are major lenders to Sri Lanka. We also have about $2.2 billion worth of dollar denominated debt issued under Sri Lanka law, which is called Sri Lanka development bonds owned by our banks. So the challenge to us is that who takes the pain? That you can't cherry pick one set of creditors and say that we are going to suspend payment to you. It has to be done generally for everybody. But it is well accepted in debt restructuring that from the official creditors, the multilateral creditors generally don't get haircutted because they have given money on concessionary terms for development projects and over a long period of time, mainly the World Bank and the Asian Development Bank. What may happen is they may loan us money to repay previous loans, like a rollover.
What would the impact of sovereign debt restructuring be on foreign equity investors' confidence? And would it be as bad as a default scenario?
So first of all, the word default has got a bad connotation. So technically, if you look at the literature also, there is no clear definition of what is default. But it straddles the two extremes of what is called a technical default. If there is a slight deviation in the covenants, or there is something called a substantive default, which is that there is a significant loss on an NPV basis, but within the terms of the agreement. So for example, we issue new bonds in lieu of old bonds, and the intersection of the two are called a contractual default. So for example, if you don't pay as per our bond indenture deeds, if you don't pay principal for 7 days from the due date or coupon payments for 30 days. So what is required at the moment, Charindra, is a moratorium on all our external debt, because we are not in a position to refinance to pay back. So we need to do a temporary cessation, I believe for 3 to 4 years, giving us time for the economy to recover. Now your question is about what the impact would be to equity investors. At the moment, basically, significant amount of the portfolio investors have already exited Sri Lanka ever since the first lockdown in March 2020, and after the markets reopened, there has been a steady flow of funds out of the country. So my sense is for existing equity investors, I think very minimal, because the sooner that we restructure our debt through a moratorium, the sooner that our economy can recover.
According to data of the Colombo Stock Exchange, domestic investors accounted for 95% of the daily turnover of the CSE in 2021, when foreign investors accounted for 47% of daily turnover in 2017. So it has been a progressive decline in foreign investor participation. How do you explain this, and should the CSE and its stakeholders be concerned?
So if you look at the primary reason why the foreign investors have exited Sri Lanka is because of the macro risk. There is a significant currency risk. And even a few months ago, when the die-hard investors who had a lot of faith, more so emotionally, to Sri Lanka, when they exited, it is said that their funds could not be repatriated for 2 months. There are also issues about dividends from some of the large listed multinationals. They have not been able to pay the dividend to their holding companies. So in that environment, this is not a market that is attractive to foreign investors. So I don't think the absence of portfolio investors has to do with the stock exchange itself, but it is a macro issue that is afflicting the whole of the country. So unless those macro imbalances are addressed, I'm afraid that we are not going to be in a position to attract investment from foreign portfolio managers.
Now, the Colombo Stock Exchange has been on a record-breaking spree for some time now, and every week it seems to be hitting a record high, a new record high. Do you think that the CSE's performance is reflective of the macroeconomic situation, and if so, to what extent?
So generally, what we are made to understand in finance is that the stock market is forward looking, and it is a leading indicator of where the economy will go in 6 months time. So most of the correction necessary, especially in terms of higher interest rates, when you say that in the month of December inflation came in at 12% and our policy rates at 6%, there has to be a substantive increase in policy rates, which will increase the cost of money. Although in the government securities market, the interest rates have already adjusted. To give you an example, the 10-year bond, which most analysts use to discount cash flows as a risk-free rate, is already trading at close to 12%. Then you have to ask the question, is the collective wisdom of the market seeing something that makes them far more optimistic? Now, the rear view mirror indicates that there were certain companies that were massive winners from COVID. So, obvious one was Expo Lanka, which is a company with 90% turnover outside Sri Lanka or even more, and they have had a once in a century boom, which the entire logistics industry globally has experienced. And that's mainly because the sea freight rates into the United States probably went up 400%, similarly air freight, and there was excess demand coming from the US. So if you keep aside those COVID winners, there have been also domestic companies that have made record profits because there have been policies followed by the government, in example import bans. So in the absence of competition, they have had increased pricing power and therefore their margins have expanded. But going forward, take example that if we have an electricity crisis, besides the example of companies that derive most of their revenues from outside Sri Lanka, all of us are going to be impacted. Previously when we used to have power cuts, they were due to weather related, and you had an alternative of a diesel generator, etc. But this time around, since it's a shortage of dollars, which means that there is soon going to be a fuel shortage, not only an electricity shortage, which requires thermal power, even the alternative of diesel generators, for that matter, even candles, the main fuel oil in a candle is derived from oil, crude oil. You might even run out of candles basically, because the raw material for a candle is also imported, it is not domestic. So that creates a huge headwind for the economy, and that is going to be a problem for most businesses, because if you are lacking a key raw material, I gave the example of electricity, but so many other items are in shortage, how are you going to produce? So even very healthy companies with good balance sheets and good management, I'm afraid in this kind of environment, because we are in a completely interconnected world, are not going to be able to function. So, and then this is going to have a significant impact on the financial sector, which is already reflected in the prices. The prices are almost 50% discount to book value. So Charindra, I think there is an element of irrational exuberance in the market, if I can put it that way.
You have suggested at certain points that the Colombo Stock Exchange is a closed club, right, or a club that is driven by a few wealthy domestic investors. Do you still believe that, and if so, why?
So what I did say was that if you add the membership of two clubs, that would constitute the larger proportion of the investors. Of course, since I said that, there were many people who said I'm not a member of those clubs, but I said that metaphorically, that Colombo still is a relatively small place, that even if you look at the statistics, it would indicate that the number of investors have significantly expanded. But Charindra, it's a long tail. So you got tens of thousands of investors who would probably only account for 20 or 30% of the total volume. And perhaps 200 individuals through multiple accounts would account for probably 50% of the turnover. So we've always had a problem that our markets don't have the depth and the breadth, and that is because equity investing is yet restricted to uh, a smaller number of people, because inherent risk appetite is very low. Currently, the whole new investors who are coming, a lot of young investors, perhaps they haven't seen a bear market before, and they may be first time investors, and they may be excessively optimistic, not seeing the downside. So when the tide recedes, as Warren Buffett said, we will know who is swimming naked.
So the broad basing of the market that the CSC talks about all the time is not accurate?
Yeah, so there is a significant amount of concentration in the activity also. So ideally, what you want to have is that the Sri Lankan household has a long-term investment horizon, and things like institutional funds, mutual funds, which we call unit trusts, pension funds, etc., which is pretty much dominated by the government through the EPF, because it's the private sector savings. These institutional mechanisms that encourage contractual savings over your lifetime, that you put away something for retirement, we don't really have that well developed in this country. So most of the activity that we are seeing, I suspect, are more speculative. They all feel that you can make quick money, and they have been right for the last 1 year or more. We have seen an unprecedented bull market, and sometimes a guy like myself, who's been in the markets for coming close to 30 years, is amazed at the way the market keeps going up every day and the rate at which the prices go up. So my sense is that this is not sustainable, and there will be a time where the market will either go sideways or the prices will come back. And there's been a lot of credit that is also flowing in. Normally, Charindra, we have about 10 to 11 billion rupees worth of margin credit that has gone in. At the end of November, that number had gone up to about 53 billion, and I probably suspect that it must have come close to 60 billion by now. So you throw more and more margin credit, and more money is coming in, it's pushing up prices, the collateral values are going up, and that creates a case for more lending. Until a point comes where perhaps sooner than later, which we have seen, that the interest rates are rapidly going up, and it is expected that in the next monetary policy meeting that there will be an increase in interest rates, because policy rates are still at 6%, while inflation is at 12%. And I believe the January number, because of a low base last year, will probably inch up even more. So we will have to have a significant increase in policy interest rates, which will jack up the interest rates, and therefore an alternative in the form of fixed income is going to be attractive.
Coming back to your thoughts about the CSE being an elite or closed club, in a small economy such as Sri Lanka's, can we expect the high net worth investor pool to be larger than it is at the moment? Is it fair to expect that?
So if you take the high net worth, it's not, so let me give you certain statistics. 20% of the top households in Sri Lanka account for 50% of national income, and the top 10% account for 35%. Somebody asked me the question, how much does the top 1% account for? Now, I don't have that number, but I would guess that it will be about 15%. It could be as high as 20%. So, like in many economies, the wealth is concentrated. Now, the recent activity that you are seeing is not necessarily all the business people in Sri Lanka who have taken some of the other assets and charged into the market, but a group of professional traders, active investors who are participating in it. and perhaps they have taken money away from other businesses that they had, for example, importing cars, because that is now banned, and they have invested in the markets and probably have made 3 times, 4 times the money that they initially invested. Now, the really smart people are the ones who would read the tea leaves and say, enough is enough, I'm going to take my chips off the table and walk away, even if I give up another 20%. But it is seldom that you have individuals like that who can control their own emotions and lock in the profits and walk away.
The think tank that you're heading, Advocata Institute, has constantly advocated for free trade and an open market. Is it not unrestrained free trade that has got us to where we are, and is that not the reason that we are continuously running trade deficits?
Charindra, for asking me this question, because this is a very fundamentally important question. Okay? So, if you understand our position of free trade, the way we understand is that we want an economy, a market economy, whose economic activity is coordinated through the pricing mechanism. So, if you have scarce resource, for example, diesel, which is the single largest import item in our import basket, which costs over $1 billion a year, you need to price the scarcity value of that resource. A barrel of diesel in the international market costs $95. And if you take 95 and divide by 159 liters to a barrel and multiply by the exchange rate and add about 3%, which is the cost of insurance and freight, the landed cost is about 125. Okay. Then you add all the other costs, and there are taxes of about 35 rupees that are applied on diesel, which is also relatively low taxes that are currently not being applied. The prices should be substantially higher than what it is being priced. So, in a market economy, there are many items and many activities, and economic agents make choices on what to consume and what not to consume based on the signals that prices give us, because you are constrained by the income that you have. So, the way we consume and the way we invest in a market economy will shift, because the prices are signaling us the scarcity value. Now, what we have here is repeated current account deficits, which has been going on ever since independence. We've gone to the IMF 16 times. So, Sri Lanka, contrary to what people think, actually has a spending problem. We have excess spending. So, if you think about an economy that only gets $100 of inflows and the exchange rate is 100, then it can sustain 10,000 rupees worth of spending. Now, if you do money printing and create, say, 12,000 rupees, then the exchange rate, which is 100, has to go to 120 for equilibrium to come. So, what we need to have is policies that restrict spending. The excess spending is the reason we are having this macroeconomic instability. Now, how does excess spending come? One channel is through the fiscal sector, through the government. Either the government is imposing too low taxes so that the private citizens are having more money to spend, and the government is spending a lot of money and not collecting enough taxes so that its deficit is reduced. And it's a case of the central bank running excessively loose monetary policy where the interest rates are not sufficiently high, what we call real interest rates, to incentivize people like myself not to spend, to forego consumption or investment, so that I earn a real return on what I save, or dissuade people who borrow and spend, because the cost of borrowing in real terms is too high. Now, if these two mechanisms are operating optimally, that imbalance between how much is coming into the country and how much you can spend can be restored. Now, what policymakers are doing is, instead of attempting to address the root of the problem, which has to be addressed through fiscal and monetary policy, they are deciding what is an essential import, what needs to so-called production economy, domestic production, and trying to pick winners and losers, which no bureaucrat can ever do. And invariably, it will be susceptible to rent seeking, that there is state capture, or basically there will be corruption, because somebody is incentivized to put up the barriers so that it benefits a particular individual or a particular producer. But ultimately, it's the consumer who is losing out big time. Unfortunately, the consumers are all dispersed. They are not united together. So they can't put across a voice. And that is where people like the Advocata Institute is trying to act as a think tank and a voice to say that we are a voice for the consumer, because there are millions of consumers. The producers are very well organized. They are very well resourced. So their case is being put forward. But the consumers' case, there is nobody to voice that. And we believe people like us are the ones who have to voice that, so that the welfare of the people of this country can be improved.
So, do you not see any merit in the government's stated policy of import substitution and export development?
It's a contradiction to try to do import protection or domestic industry protection and exports. The two don't go together, right? Because if you want to export, you will need to import. I mean, unless you're doing extremely simple products, every product will have many steps to it, many raw materials, many inputs. So if your product that you are exporting is going to be competitive in the world market, you have to ensure that you can buy your inputs at the lowest possible price. Okay. So if you try to say that, no, I want to promote exports, but in the absence of competitive input material, because you are protecting certain industries that you want to develop in your country, you will not be an efficient producer, and therefore your ability to export will come down. So let me explain to you in another export, which is an indirect export tourism. And I've been involved in the debates of the tourism industry that say that the price realization that they get on a room is way adequate and they have to market. But my argument, I have served on a hotel board for about 10 years, so I have some understanding of the economics of that business, is if you take the hotel business, your single highest cost factor is the cost to build a hotel, right? Some of the architects and quantity surveys have shown me that the cost of construction in Sri Lanka is about 30% higher than what it would be, for example, in India, and even 15 to 20% higher than what it would cost in a place like Thailand. And when you do the investment appraisal for a hotel, the investment cost, Charindra, is upfront, right? So all the cash flows that you earn over the lifetime of the hotel is over a period of time, and that has to be discounted by the opportunity cost of capital. So if there was one lever that you would push to improve the economics of that investment, is to reduce the upfront cost. Okay. Now the problem with construction in Sri Lanka is that there is a productivity issue of how we build, but the building materials are also significantly higher than what we could source in the world market. And if you take the entire construction material industry, it has been one of those industries that the current trade policy has offered massive protection, in some cases as high as 70% border tariffs. Now, when you take these border tariffs, which are without VAT, you have to frame it in terms of the value addition this industry is making. So if the border tariffs are as high as 70%, And if we give them the benefit of a very high value addition like 40%, more like 30%. So put 70% against 40%, that's an effective tariff protection of something like 175%. Now, I've been also a businessman, and I'm coming from a family that has had manufacturing industries over many decades. I mean, if you need this kind of protection, you shouldn't be in business. I mean, some element of protection because we are a small country and whatever the arguments are, this is excessive protectionism. So what is happening is you will never become efficient, and you also have a problem of excess profit. So you are making supernormal profits, and therefore you have more money to exercise more rates. You can influence the political process. So this trade strategy that we have does not support economic growth. Because if you look at countries like Vietnam, and I was having a look at the numbers, Vietnam has been a stellar success story in terms of exports. I mean, over a 20-year period, they increased their exports from something like $10 billion to $220 billion, while we took it from like 3 billion to 10 billion goods exports. And Vietnam's export performance has contributed about, a few years ago, something like 15% to their total growth. In Sri Lanka, export contribution to total growth is less than 5%. So most of it has been domestic growth by expansion of non-tradable sectors, and therefore our economic growth model has collapsed because we have been driving those non-tradable sectors by borrowing from overseas.
Going by what you said, is it fair to say that you are completely opposed to excessive protectionism? And if you are, is it fair to expect Sri Lankan brands, Sri Lankan companies and Sri Lankan industries to compete with global brands, even on their home turf, without that advantage of having some protection?
So, this is a tough question because there is something called the infant industry model. Now, in a human being, I've asked this question, when do you stop being an infant? I would think it's 2 years, right? So, what the theory says is that when you are a nascent new industry, you need time to grow up. You need to get stronger, etc. So, there is a theory that, okay, you protect initially so that you allow. But what has happened in Sri Lanka, as the academic chair of Advocata, Dr. Sarath who is an expert on trade, says, he has seen too many infants in geriatric wards. Some of our policies have been offered to some of these industries for decades. I mean, there is no merit in that policy. So even if we are going to exercise industrial policy and say that we would like to have a certain sector that we want to expand, then basically we should have a reasonable sunset period. The protection cannot be entrenched. It can't be forever and ever. And in our current policy, we don't see that. Governments changed, they are able to influence, and these protectionisms are extended, and the poor consumer is paying 30%, 40% more from what they would be able to buy if there is a more free market regime in the country. So, I mean, you are privileging a few at the expense of the many. I don't think in a democratic country that is sustainable.
Because you mentioned the tourism sector earlier, the government seems to have placed a lot of hope and emphasis on the recovery of tourism and the foreign exchange earned through that. In your view, can tourism pull us out of the economic hole we are in at the moment?
So I believe that there is a fundamental misunderstanding. And I go back to my $100 example, Charindra. So because tourism got impacted, the $100 that we are earning as a country would have come down to $80. Okay, so $80 into 100 rupees to a dollar exchange rate would only give us 8,000 rupees worth of income to spend, right? Now, Our economy in year 2020 and 2021 put together, I am estimating nominally grew only 11%. We know the number up to third quarter of 2021. I am estimating the last quarter will be a stronger. So take 11%. The money supply as shown by M2B has grown something like 37%. And currency in circulation has grown up by 60%, right? The physical amount of currency notes out there. So there is way too much of money chasing too few goods. Now I come back to my argument about spending policy, that unless you have the right fiscal and monetary policy, in this case tighter, increase income. So say if we have a recovery in tourism and you have more income coming into the country, that means income means spending power in the hands of whoever get that income, whether it's households or firms. So if that income is used to pay off debt, then those dollars will be preserved in the country. But if that income goes into the hands of whoever earns it and they in turn spend it, right, again it is creating more demand for imports. So as I said, that this is a problem of excess spending and it is not a problem of income. If our tourism industry improves, certainly it will put more income in the hands of our citizens. It will make enterprises that are almost insolvent some ability to recover, and it will hopefully help our economy to grow. But all of that new income that comes in cannot be permitted to be spent. That either has to be partially taken away through taxes, or basically we had to incentivize the people receiving that to save it. And that is where interest rates have to go up and the exchange rate has to come down so that the need for imports come down.
Finally, what is your prescription or short-term and long-term solution for Sri Lanka to come out of the current crisis? Is it something like the IMF, or are you advocating for a more homegrown solution?
So in the very short term, we need what is called macro stabilization because our system is not in balance. So the debt that we have accumulated, the dollar denominated debt is about $37 billion, but the totality of the debt is snowballing at an astronomical rate. So to just explain it, that until the year 2000, 52 years after independence, our total debt in rupees was 1.5 trillion, right? 52 years, because it's not the same rupees. In 2019, the debt had grown to 13 trillion. Most of the debt is coming due to accumulation of interest. Okay. In the year 2020, our nominal economy didn't grow. So we were at about 15 trillion at the end of 2019. But the debt grew from 13 trillion to 15 trillion. That means we added 2 trillion of debt. Because at the end of 2019, we had these disastrous tax cuts. The VAT, especially, we reduced the VAT rate from 15 to 8, and we significantly reduced the VAT base. The number of registered VAT payers were about 30,000, that came down to about 7 or 8,000. And in 2021, which I estimate will probably have a growth of about 11% nominal, which means that we will add about 1.5 trillion to GDP, and a GDP will come out at about 16.5 trillion. We added 3 trillion of debt. So the 15 trillion became 18 trillion. So the problem is that debt is growing much faster because the interest is compounding and we are running what is called a primary deficit. So from the budget also we are borrowing further to fund it. Besides the interest, the primary balance is revenue minus all expenditure. And things like the recent salary increases of public servants, you're going to add another 100 or 120 billion to an already very high 800 billion expenditure on salary and wages. So this is a totally unsustainable situation. So first is that the foreign external debt that we have, we will need a moratorium because we don't have the dollars, because we can't access the markets again to refinance. We can never generate those dollars through the current account, right? We can never do that. We have to regain market access so that we can borrow hoping to repay what is coming due. Now, in the absence of market access, because our rating has been downgraded 2 times, one step up of default, we have absolutely no choice but to do a moratorium on our external debt. Second thing is, we cannot go to the IMF, right? And it is without doing a moratorium on the debt, because they do not want to lend us money if that money is going to be used to pay our external creditors. Now, the IMF is a necessary condition for any kind of restructuring of our debt, because the creditors want to ensure that somebody is monitoring the economy, and they don't have the ability to monitor, because even if they agree to a moratorium, they want to ensure that they will get paid after the moratorium. Okay. Then we have to ask ourselves, our growth model that we have had for the last decade or more has been borrowing from overseas and refinancing domestic industries. Tradable, non-tradable sector, we had a significant expansion in the government. All of these activity going forward is not sustainable anymore. We don't have the benefit of a demographic dividend. Our demographic dividend peaked about 15 years ago, which means that the prime working population as a proportion of the total population peaked about 15 years ago. So what's happening now is our population is aging. So the number of people in that prime working age going forward is going to start declining, right? So for us to grow, we need to create more jobs, right? In order to create more jobs, we can't be creating jobs through the government, but we need to incentivize many more businesses. And I estimate that if you want to create 1 million new jobs, you will have to create between 50,000 and 100,000 new establishments. We will have to attract a lot of the female population into the labor force, because our labor force participation is only 35%, while our male participation is between 65 to 70%. We also, Charindra, need a massive productivity revolution in this country. We have to improve our land productivity. To give you an example, the yields on a rubber plantation or rubber yields on rubber land is only 950 kilos per hectare, while in Thailand, in Malaysia and Indonesia, it's about 1,500. The average coconut tree in Sri Lanka produces 62 nuts. If you go to a place like Pollachi in South India, they can produce as high as 150. And we have estates in Sri Lanka that produce 90 nuts per tree. So all we have to do is to increase the national average by, say, 10%. That would create a massive exportable surplus, because generally, like last year, which was a good year because of the rain, we produce about 3 billion nuts. Out of the 3 billion nuts, 2 billion are used domestically. Only 1 billion is the exportable surplus. So if you take the national output up by 10%, the exportable surplus increases by about 30%. That alone on a net basis can earn you $100 million. I gave you examples of agricultural loan, but all over the economy, basically, we have low productivity sectors. So we have to have a significant increase in productivity in the economy. It is through productivity that lifestyles will improve. And in order to improve productivity, the key is competition. It is competition that forces enterprises and firms and individuals to improve. And if we do not allow competition like the regime that we have, our firms will never become good. Our citizens will never enjoy low prices, low costs. It is through productivity that you can have a sustainable life. And to me, we have to put in policies to significantly improve productivity going forward. So through productivity, wages will increase, profitability of firms will increase, and that's how you create a surplus, you create a savings base, which then in turn can be reinvested, and that virtuous cycle keeps repeating itself.
Mr. Murtaza Jafferjee, thank you for being on the show. And that's a wrap for the first episode of the Morning Talks. Thank you for watching.